नमस्कार सभी को. Let's start the new topic, an important topic also in class 11th accountancy journal, which is also called books of original entry. See students, journal is the books of original entry. Now when I say original entry, what I mean, whenever or whatsoever the transactions happens, see we have got two professions, two people, professional people. One is a bookkeeper and another is accountant. The work of an account the work of a bookkeeper is just to record the transactions, whereas the work of from where the work of bookkeeper ends, the work of accountant starts. That means after recording, the only work of recording the transaction is up to bookkeeper. When these transactions are transferred or hand over to the accountant identify the transactions, classify based on their nature, then summarize it and gives you the result interpretations after calculation of all the transactions. That means at the end of the year, the accountant comes up with profit and loss statement, financial statement of the business. So journal is very important. Why? Because here you learn about how to record the transactions. So there are certain sub-journals which are maintained under journal. As you can see, journal and subsidiary books I have maintained written here. Cash book, purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable, and journal proper. So these are the subsidiary books, or you can see these are the books where initially the transactions are recorded. Say for if the transaction is based on cash nature, it will be recorded under cash book. If it is based on credit purchases, credit means आप उधार में जब खरीदते हो, that time you have to enter the transactions under purchases book. In the same manner, when sales are being made on credit, जब उधार में आपने बेचा, and that time you have to enter the transactions under sales book. In the same way, suppose the goods which you have purchased, if it is not up to the desired standard, or for any reason you have to return it, that time the returning goods have to be entered under purchase return book. Likewise, if the goods which you have sold is not up to the mark as per the need of the consumer, and if the consumer returns back to you, it will be entered under sales return book. Then there is bills receivable book, bills payable book, and journal proper. So usually journal proper is maintained when you purchase machinery or assets in credit. These are the things: purchase, sales, purchase return, sales return. They are referred with goods only. When you do the transactions or selling and buying of goods, that time you have to make entry under purchase and sales books accordingly based on the nature. If goods are purchased on credit, it will be entered under purchase book. In the same manner, if goods are sold on credit, it will be entered under sales book. Now let's move ahead. You see here the format of journal. There are 5 columns I have made: date, particulars, ledger folio, debit amount rupees, and credit amount rupees. So let's see one by one. Under date column, you enter the date on which the transactions took place. Under particulars, as you know, every transaction has got two sides, debit and credit. So debit item will be written first, followed by credit. Ledger folio. Ledger folio is nothing but the paging. See, after journal, you have to prepare, you will be learning soon after this, once you completed the journal part, how to prepare ledger accounts. So under ledger accounts, separate or individual account are being prepared. Say for, to make you understand, let's assume a machinery account. We have made a machinery account in the ledger on the page number 40. So here under ledger for you, I will mention page number, here I will mention 40. Okay, against the machinery account. So this will help me to find whatever the transactions relating to machinery on page number 40 under ledger. So ledger folio is nothing but the paging. Debit amount, here you have to enter the amount of debit, the amount which is debited, and a credit amount, the amount which is to be credited. Then, very important thing, once you write, the narration is also there which comes under particular parts. After writing the transactions, you have to give a brief explanation of the transactions. What transactions you did, you have to give narration. That narration should always start with a bracket and ends with bracket. Then comes the rules. As we know, there are 3 accounts: real, personal, and nominal. So, under these are the golden rules, golden accounting rules. Debit, for real account, what comes in debited, and for credit side, what goes out. So, on real account says, the under real account, the rule says what comes in should be debited, what goes out should be credited. Under personal account, receiver should be debited whereas giver should be credited. Under nominal account, losses and expenses should be debited, incomes and gains should be credited. Then then next important topic, goods. Now under accounting, goods can be understood in 5 ways. Goods are classified under 5 categories: purchases account, sales account, purchase return account, sales return account, and stock account. Remember, for your understanding, you must know this: purchase, sales, purchase return, and sales returns are all nominal account. They consider under nominal account. So which rules we will be following? This losses and expenses and incomes and gains. Okay. Stock account is not a nominal account, therefore I have not written here. That comes under asset actually. Entry how to pass, like for example, question says purchases goods of 2000 rupees. So purchases, as it is a nominal account, that means represents your losses. You made purchases, so purchases should be debited since it's a expense. You are purchasing goods purchased, that means it's expense. Then comes sales account. Sales, yeah, that means it's an income, because if you sell goods, you get money in return, right? That makes it income. Therefore, to sales account. Remember, whatever account is credited, you have to show it, signify the credit account with the prefix word to. Whereas when any account is debited, which should be written first, it should be written or followed by word dr. Debit, the short form is dr. In the same manner, purchase return should be credited and sales return should be debited. Then important point regarding this purchases. Purchase and sales. If in question it is mentioned purchase made, sales made, but it is not mentioned, any name is not mentioned, like only question says purchase goods of 20,000 or sale goods for 50,000, that transaction will be considered as cash transaction. Important point. Second, if it is mentioned purchase goods from Mr. A by paying cash, if the question specifically mentioned Mr. A, after that it is mentioned that purchase has been made in cash, the transaction will be considered as cash transaction. Purchase and sale, if it is said goods sold to Mr. X, here since it is not mentioned about cash, it says only goods sold to Mr. X. In that case, since nothing is mentioned about cash, so we will take it as a credit transactions. Only 3 points you have to remember. If no name is given, then it is a cash transactions. If name is given but it is also mentioned that transaction is made in cash, it will be considered as cash transactions. But if only name is given and nothing is mentioned about cash, it will always be considered as a credit transaction.